Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the day's schedule events for Wednesday, 13th of April. Well, the European day starts off with EU industrial production for February. Now, January was the largest month-on-month increase in over 5 years, so some mean reversion would be natural in any case. On top of that, with the PMIs for February falling back, it's quite likely that industrial production will fall too. This could be negative for the euro. However, the business surveys recovered somewhat in March, so it's not clear how much weight the market will put on the February data. Next is U.S. retail sales for March, a key indicator for the U.S. economy. The consumption data has been a big disappointment so far this year, and March isn't expected to be much brighter. The headline figure is forecast to improve somewhat because of higher gasoline prices, but excluding autos and gasoline, sales were forecast to have grown at the same pace as in the previous month, which would tend to be neutral for the FX market. Now, the big event of the day is the Bank of Canada rate decision. The market expects no more moves from the Bank of Canada this year. The main point, therefore, will be the bank's assessment of the new government's budget, which forecasts a much wider budget deficit than before. The market will want to see whether the bank agrees that the budget measures will boost growth. Another focus will be the impact of these measures on the bank's estimate of the output gap, which is the key to assessing its view on inflation. If they do agree with the government, the bank could shift from a loose bias to a neutral bias, which would be positive for the Canadian dollar. On the other hand, the bank is relying on a weaker Canadian dollar to facilitate export-led growth. They may therefore temper a more optimistic tone on the economy with negative comments about the exchange rate. The G20 finance ministers and central bank governors will meet today and tomorrow. I assume they'll issue a communique as usual. At their meeting in Shanghai on February 27th, they pledged to refrain from competitive devaluations, and we will not target our exchange rates for competitive purposes, unquote. The key points this time will be 1, what changes, if any, they make to the statement, and 2, even more important, how the Japanese delegation interprets the statement. Recently, several Japanese officials have argued that these commitments don't preclude intervention to resist one-sided speculative moves in the currency, which is what they say has been happening recently. Australia announces its employment data for March overnight. Any market impact from a higher unemployment rate should be countered by the relatively large rise in employment that's expected, making the figures as forecast positive for the Australian dollar. This is Marshall Gittler, Head of Investment Research here at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.